Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 3rd of April, 2019. This is episode number 1490 of our Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market's being led this morning by the small caps of Russell, followed by the next in line is the NQ, up 47.5 points. And then Euro stocks, the S&P, and so on and so forth. The catalyst supposedly for this push-up is two things. I don't know how it's said. I think it's Zaisen, something like that. Manufacturing PMI out of China came in strong, has shown that there's quite a bit of growth going on there. It looks like the Chinese economy is on the rebound. The number came out at 54.4 versus 52.3. It's the highest since January 2018. New orders on that number reported are at a 14-month high. And that caused a pop. In addition to that, there was an article by the Financial Times that stated in not a correct way, I guess, that officials in the U.S.-China trade talks are getting over a lot of hurdles. But that remains to be seen. So we got a second pop on that. So we're gapping up this morning. The S&P is trading at 28.84 versus the high at 28.73.50 yesterday, 28.73.75. And it's looking like allocations to risk this morning. The laggard is the bond down 25 ticks on the bond. The Bund is down 84 ticks. It's quite a bit. And the 10-year is down 9.5 ticks, 10 ticks, 10 big ticks or 20 small ticks, whichever way you look at that. The dollar's off. Interestingly, gold is off, but not much. As the dollar's dropping, gold kind of firms up. Traditionally, that's the correlation. So that's where we are today. Looking at what's ahead this morning, we're getting, whoa, UTC, hang on. My calendar does this weird thing where it just decides to reset the time. This morning, we're having the market composite PMI 15 minutes after the open, looking for 54.3. These are final numbers, not as important as the others. At 30 minutes after the open, we have non-manufacturing business activity, non-manufacturing PMI. The PMI number is looking for 58. This can be a mover. Then we get crude oil inventories at 10:30, expecting a draw of 0.9 million. In gasoline inventories, looking for a draw of negative 1.5 million. We get Fed's Kashkari speaking at 5 this afternoon. So how does that, why am I going through the calendar? Everybody has access to the calendar. We did get ADP this morning. It's important to know what's coming because we want to know what might interrupt the auction. The calendar I use is called tradingeconomics.com. It's really good. Very succinct, and you can set it to whatever countries and time zone you want. It's really good. Anyway, I don't get anything for saying that. I don't get anything for saying anything, really. So that's where we stand. Let's take a look at what we expected yesterday versus what we got in the review segment. Let me draw this up a little bit. 1 second. Let's have some shrinkage here. Get it? Shrinkage. So I just want to make this bigger just so that it's more clear, hopefully. Hopefully you're viewing this in 1080p. You can select the quality of the broadcast using the little icon at the bottom right of your YouTube page. Select 1080 so you can see what the numbers are. So yesterday I was looking for a pop higher above the prior day's range. I was looking for it to break through that 28.70, 3.75, push into 75.76, and then I was looking for responsive selling. The overall bias coming into yesterday, based on what I saw in the overnight session and what it was doing the day before, was that we are likely to test down into the point of control. The point of control is at 28.60, 28.60 and a quarter, 28.60, and that was the number I was looking for yesterday as a primary scenario. The secondary scenario is that we don't test up, we just drop. We push down into the 28.64.50 low volume node right here from the prior day, jigger around, bounce around a little bit, and then get down into the point of control, and then potentially push through the low. Seeing difficulty in how this trend day was formed. This is officially a trend day, but it really has, but it really did try hard or work very hard to get up there. Here's what actually happened yesterday. By the way, had the worst volume since August of 2018, since August 7th, the worst Tuesday volume since August 7th of 2018. And I'm talking about a regular Tuesday, not one that's before a holiday or on rollover or whatever. Yesterday, the pit session only generated 704,780 contracts versus what we would normally expect, which actually is right here. What we'd normally expect is a constantly updated view. It is right here. So this goes back to July 20th, 2015, the last swing low, and this is what we would normally expect. It is the mode of all volume going back. This is on a price adjusted basis with holidays removed. So we're looking for about 1.1. We've been stuck at 1.1 being the mode for a long time in terms of RTH or pit volume. And yesterday generated 704,780 contracts, really, really low. And there's just very little participation yesterday. So you can see the whole day, all of the rotations in the entire day showing on one screen. And I'm not having to squish the numbers all that much. So overall, it really had a hard time holding higher prices. It opened up at 28.71.75 and then just fell right off, retested the 71.75 right there. It's an open auction in range, and it just kept pushing through. So we had an opening swing right there. You can argue that the opening swing is right here. That's okay. But it broke the opening swing low, so I was looking to the short side. I was looking for the point of control, which is right here. It's this maroon line. It's, again, the point of control. The VPOC, or the volume point of control, is technically, statistically, the mode of the data set, the mode of the day, or the most traded price of the day by volume. And so essentially that is the most accepted price. And so I was looking to the short side, looking at scenario 1 at first, but there was no push above the high. So looking for scenario 2. So I was quite bearish, or quite interested in squeezing the short side. Was looking for the point of control, and I was looking for yesterday's low to be tested, or the prior day's low to be tested. And all it did is it pushed down into the 62.25, and then we had, by the way, really important to monitor your rotations. This pane right here, pane, P-A-N-E, this pane right here measures the rotations. It basically measures how far each swing has gone. And it's important to monitor that, in my opinion, to see who's pushing in which direction. And you could see down here that the sellers compared to the buyers, here we had a bit of a push. The sellers were a little more successful than the buyers until this rotation back here. So once I saw this rotation back here, it went back to the point of control, to the mid and the lower the lower opening swing. I was interested in the short. The short was setting up for a push down, pullback, looking for the short back to the IB low, and then for it to come back at least to a higher low. That was a setup for me, despite the fact that we had a clear open auction and no direction in the market. This is a perfect day to get chopped up on something like an opening range trade, or a trade that's anticipating more movement or continuation from the other day. So if you're trading from the inside out, this wasn't a good day for you. And that's just how the market rolls. It's hard to tell what's coming until it actually happens. So we do it on a best guess basis. So I was looking to lean against the mid. I talked about this on Convergent, looking to lean against the mid and against that 28.67.75 zipper. And it pushed up, looked good, went to the IB low. The IB low, remember, the IB is the first hour's high and low. And it generally describes the biggest portion of the action of the day being done. The big money comes in and out at the beginning of the day generally, and that business gets done. So we outline where the swings are, where that stopped, the buying and selling stopped, and we call that the initial balance. So it tested the initial balance low, and then off it goes. So now it's looking pretty good in terms of neutral. We see some rotation expansion up, and it's just a chop fest in here until it finally pushes through the high by one tick. It pushes through the high by one tick, the prior high by one tick, before it comes in and sells off. To me, that looked quite bullish the way it was doing that, but the delta was negative most of the day. I mean, from this point forward, the delta was more selling, more aggressive selling than buying by volume. So that's the recap of the prior day's action. And here's what's happened overnight. Here's your PMI number. Here's the news. This is all just a mess of news right here on the Sino-US trade talks, and we're above the prior day's range, which is right here. So we poked up, we have an impulse up, pulled back to the prior high, and continued higher. One thing to take away is we had a swing high at 28.66. If you recall, that was the swing high the middle of last month before we sold off. And yesterday we poked into that. We poked into, not here. We poked into that and came right out. There was a lot of buying interest as soon as it pushed below that area. Now that we've taken it out, and to me, this looks like a pretty good base. The overnight session went to 65.25, which was just 3 ticks through. So to me, this looks very, very bullish. We do have a P-shaped profile overnight. That is a short squeeze. It's indicating a short squeeze, squeeze, and then balance right here, fuel up for the opening session. So be careful today if you're shorting. It doesn't mean that the shorts may not work, but the probabilities are not on your side. So let's take a look at current conditions. All right. So current conditions still have a big gap below. That's the gray box. It looks like a lot of noise on my screen, but it's not. It's simply avoiding having a whole bunch of charts up and presenting everything I need to know on one display, and that's going to create a little bit of noise. These are what are called master levels. These all come in as one, and they outline things like volatility bands and the prior high-low and prior swings and things like that. These gray bands are stock zones. These are proprietary. It's a trademarked term, and these are areas that I'm looking to interact with the market. These are usually exclusive. I keep forgetting to turn them off. These are exclusive to Convergent members. These are just areas I'm looking to do business. Generally, the market either struggles or turns more than not in those areas, and they're key areas for me. So you can see the overnight high is right at dead center on this stock zone at 28.86 1/4. Stock zones are built on price action, statistics, and volume profile type stuff. They can also be on fib projections and things like that in new territory. What are we looking for today? We're looking at an open auction out of range again, just the same as down here, and before that we've had many gaps up over the last month. Open auction, looking for an open auction out of range. We're pressed up against this double double area of potential resistance. I'm looking for it to test that overnight high. I'm looking for a response down into 28.78, and I'm looking for it to hold here and then start to squeeze at some point. Now remember, the push up on this day really didn't get all that much participation, and prices are even higher. So I'm not looking for a gap and go. Now, the gap and go is a scenario, and you know, God help you if you fade a gap and go. The secondary scenario is it becomes responsive right away, pulls right back into 28.78 area or so, gets an impulse up, holds steady, and then just tapers off and then starts moving towards the prior range. The profile of yesterday was completely balanced. The value area is valid, so 71.50 becomes the first key response, and then of course the point of control when it comes to scenario 2, expecting some buying into the close, a little bit of buying into the close. Scenario 3, because we're gapping up, is looking for an open test drive. So open, respond, drive, consolidate here, and then start to move to higher prices. I should have shifted the screen a little bit, but that's what I'm looking at. Above 28.90 comes the 2900 century figure, and so on, and that gives us approximately 18 points of range on scenario 3. 2900 becomes a really, really good target, probably a good area to scale out before you get there. Does this all make sense? Hopefully it does. And just remember to trade your plan. If you're coming in and winging it, you might win here and there, but overall you don't have an edge. And an edge inevitably, given enough samples, an edge inevitably tends to show itself. So if you're coming in without a plan, without some idea of what you're willing to do, or if you're not, if you trading live just to trade live because you want to make money, I urge you to stop and consider writing things down and holding yourself to those things so that you can make adjustments. Trading is a lengthy process in terms of learning, and it requires you to identify your faults and errors and eliminate them to see profitability. There is no such thing as picking up somebody else's plan or idea and just trading it to profitability. It's not going to happen. I mean, the probabilities of that are like lotto, mega lotto type probabilities. Probably it's better for you to just treat yourself as a lab and you know, create a plan and then test how that plan works in the real market and eliminate the mistakes and errors, and then let the edge show over time. Good luck.